What's up, future millionaires? Mike the Investor, and I am up over 180% on my Solo Electrameccanica stock position. Now, I wish I would have bought more shares in the company, but the stock price soared faster than I can buy. So let's jump right into it. Alright investors, welcome back to the channel. Now before we pull up my juicy solo stock position, we're going to cover a few things in this video, so consider checking out some of the timestamps down in the description if you only want to look at certain parts of this video. Now the first thing we're going to look at is who is Solo Electrameccanica, for some of you that may not know who this company is. Secondly, we're going to take a look at the company's third quarter earnings, which was released November 10th of this year of 2020. Thirdly, we're going to take a look at this very bearish article by Citron Research. They were actually quoted the #1 activist short seller of 2019. We're going to take a look at the article they released Friday on Solo stock price. And then last but not least, we're going to dive into my personal solo stock position. So let's dive right into it. So for the investors that haven't heard of Electrameccanica yet, this is a very hot EV stock. It soared over 60% last week alone. There is a lot of buzz around this company. So let's briefly look at the company's website and see what all the buzz is about. So as you can see here, we are on Electrameccanic's website. They have 3 vehicles that they are marketing. It is the Solo, the 𝗧𝗜𝗠𝗘𝗦, and the e-Roadster. Now, the Solo is the vehicle that is currently in production and will be coming out here in 2020. As you can see here, it is a single occupant vehicle. Top speed is 80 miles per hour with a 100-mile range. You can reserve these now for $250. And as you can see here, it does have storage in the back. As we move on down, it does come in 4 colors currently: red, black, white, and silver. And as you can see here, these are just some more pictures of the vehicle. It is a really cool looking vehicle in my opinion. It is really niche down, and a lot of people say it kind of looks funny looking, and then some people really like the idea of this company. Now, one thing I do want to keep in mind, when the Volkswagen Beetle came out, it was more of a love-hate relationship. And even though they didn't have the largest share when they first started off, the niche of that community grew over time, which led to positive growth for Volkswagen. And I think Solo is going to kind of travel in that same footstep as the Volkswagen Beetle did, because I think the niche in the community alone is really going to grow over time, and I think it is definitely going to catch on here in the next couple years. So as we look at the 𝗧𝗜𝗠𝗘𝗦 here, this is the car that we haven't heard that much about, and we don't have a lot of pictures on this vehicle yet. This is going to be their sports car, all electric vehicle. As you can see, it has 250-mile range, 125-mile-per-hour top speed, and you can pre-order this vehicle. I don't know what the price will be on the 𝗧𝗜𝗠𝗘𝗦 just yet. And then as we go up to the e-Roadster, there are some e-Roadsters that actually have been in production, which you will see when we take a look at the earnings of this company. So you can see here's the e-Roadster. Now there are some pictures on this vehicle. This is a 2-seater all EV sport classic type vehicle, and the price is $124,900. So basically $125,000 car. And as we scroll down, you can see it really has that old school classic look to it. It really looks really luxury as well, and I think some of the big money players will be buying these vehicles. So this is what the e-Roadster looks like. As you can see for the performance here, 155-mile range. This car goes from 0 to 60 miles per hour in 6 seconds. And as you can see here, it has 9 hours of charge time. And I think this is really going to be a game changer when this car gets released and people start seeing it on the road. Now there is one last thing I kind of want to talk about their main vehicle that they are releasing, which is the single occupant vehicle, the Solo. The CEO, Paul Riviera, came out and made a statement saying that they made some adjustments to the Solo for extra cargo capacity. So let's take a look at what he said and some pictures on what this concept vehicle will look like that will be coming out in 2021. Let's check it out. So you can see here, Electrameccanica introduces some minor modifications to the Solo, which opens up a new revenue stream. So let's scroll down and see what Paul Riviera, the CEO, has to say. So as you can see here, Electrameccanica CEO Paul Riviera joins Steve Darling from Proactive Van Vancouver with news the company has revealed a utility and fleet version of the Solo electric vehicle, which opens up a new revenue stream for the company. Now it goes on to say Riviera discusses the easy modifications were developed based on direct input from potential commercial and fleet partners and will be equipped with a stylish and functional cargo cab, offering additional capacity and versatility. Now this is the concept picture that I found for Solo for the new modified cargo space for the Solo electric vehicle. I really like how this looks. It makes it a lot more versatile for companies that may want to do delivery, for maybe single people who don't have a, relationship status, that just may have a lot of luggage that want to travel. It makes it very versatile for them. And I like that Solo stated that they made these modifications to this vehicle due to, fleets and commercial. This means that companies are really looking at using this vehicle, whatever it may be, for rather it's delivery, rather it's for advertisement, or rather it's just to, lower their costs overall for their transportation for the company. So I really like this idea. And something else I want to dive into, Solo is partnered with a top tier partner, which is the largest multinational company, which is China's largest manufacturer of motorcycle and three-wheeled vehicles. Now this manufacturer produces 2+ million units annually across 130 models of 2- and 3-wheeled vehicles. So I think this is going to be massive for Solo over time, because not only are they going after a specific niche, but they are partnered with the top manufacturer in China and one of the top manufacturers in the world in this niche as well. So this company is strategically lining themselves up to be successful. The next thing I want to show you guys is, if you can see here, Solo is establishing facilities in the US. As you can see here, identified 2 finalist states with robust incentive packages, Arizona and Tennessee, which also gives them the ability to avoid cumbersome tariffs through the local assembly of knockdown kits supplied from 𝗧𝗜𝗠𝗘𝗦𝗦. Now I believe that's how you pronounce that, so excuse me if I pronounced that wrong, but I really like this because this not only gives Solo the ability to make their cars in the US, and they're a Canada-based company out of Vancouver, but they also can make their cars in China. And I really like this because in the upcoming future, we may see some more tariffs, and with them having facilities in the United States, it gets them around those tariffs potentially, which will help them save a lot of money compared to other potential companies in the same industry. So the last thing I want to show you guys on Solo is they are strategically going after the California market. As you can see here, there are 4.6 million commuters in Los Angeles with an average 30-minute commute, and the ideal market for Solo. Now, I just wanted to show you guys that because California has the most EV cars on the road as we speak, and that's why Solo is trying to target that market first, which makes perfect sense. So as you can see here, these are Electrameccanicas retail locations. These are the states Arizona, California, and Oregon. Now you have most locations in California because, as I said before, they are trying to really take advantage of California having most of the EV cars on the road. And then if you look at their US current market access, you can see over 80% of the US only needs a normal driver's license. It makes the car that much more accessible for not only all drivers, but for younger drivers as well. Now let's dive into the company's third quarter earnings and see how this company has performed and what to expect in the future. So let's check it out. So as we look at their third quarter 2020 financial summary, we can see for the first bullet point here, their cash and cash equivalents and short-term deposits were 101.1 million in Canadian dollars as of September 30th, 2020, compared to 11.1 million as of December 31st, 2019. So we can see they have grown their cash on hand a tremendous amount, which is definitely a good thing for the company. Now the next bullet point is going to talk about cash used in operations in the third quarter of 2020 was 7.2 million compared to with cash used in operations of 2.8 million in the same year ago quarter. So you can see the cash in operations have definitely raised quite a bit because the company is going into production. So definitely you're going to see that cost raise quite a bit. So you can see the total revenue in third quarter of 2020 was 0.3 million compared to 0.2 million in the same year ago quarter. The increase in revenue was primarily attributed to an increase in custom built roasters that were produced. And this says roasters, so that means there is more than one that is being custom built for either companies or people that is wanting to buy this vehicle. And this is also something I found in the article. As you can see, Electrameccanica is also offering its own classic car looking four-wheel two-seater e-roaster, which will start at $124,900. That compares with the company's recently reported total third quarter revenue of about $230,000. Now we know the revenue was more than $230,000 because they reported 0.3 million, which is $300,000. So I just kind of wanted to show you guys that I did find that when researching on this video. And now we're going to take a look at their general and administrative expenses. In the third quarter of 2020, there were 2.5 million compared to 2.3 million in the same year ago quarter. The increase in general administrative expenses was primarily due to the increased rent, office, legal, and professional investor relations and salary expenses, offset by a decreased consulting fees. Now that does make sense, definitely with the company growing and starting to put more cars out there and the company making more dealerships. They're definitely going to need more office spaces, more consulting, and all of that. So that definitely makes sense in my opinion. As we look at the research and development expenses in the third quarter of 2020, there were 2.1 million compared to 3.3 million in the same year ago quarter. The decrease in research and development expenses was primarily due to a decrease in material costs, offset by an increase in labor costs. And there's definitely going to be an increase in labor costs because this company is going into production and starting to get them cars out on the road. So they definitely have to hire more people to help get these cars on the road for consumers. So that definitely makes sense. So now as we look at their operating loss in the third quarter of 2020 was 8.8 million compared to an operating loss of 7.8 million in the same year ago quarter. The increase in operating loss was primarily due to the increase in general administrative expenses mentioned above, as well as increased stock-based compensation expenses, offset by a decrease in research development expenses also mentioned above. And the last thing we're going to take a look at is the company's net loss. So you can see here, net loss in the third quarter of 2020 was 14.9 million compared to 5.3 million in the same year ago quarter. The increase in the net loss was primarily related to the fair market reevaluation of the company's warrant derivative liability. Now that is a mouthful, so let's see if I can kind of explain that a little bit more before we dive into this extremely bearish article on Solo. So what does issue warrants mean? It means companies typically issue warrants to raise capital and encourage investors to buy stock in their firms. They receive funds when they sell the warrants and again when stocks are purchased using the warrant. Warrants are typically priced inexpensively compared to the underlying stock, make them more appealing to investors, especially if it's for an unproven company. You may never use this option, which means you lose the money you spend on the warrant, but the company issuing the warrant doesn't lose anything. According to the U.S. News and World Report, you're more likely to see warrants from speculative companies than blue chip companies, which are well-established firms. New unproven firms tend to need more capital, but the risk may not appeal to some investors. A stock warrant is a way to test drive a stock before you dive in. So now let's kind of dive into this extremely bearish article that Citron Research did on Solo. Let's check it out. So as you can see here, Citron calls Electrameccanica a complete joke. Let's see what they have to say. The rally in electric related stocks has not missed by Citron Research. The short seller is out with tweets Friday, hitting one of the fastest growing names in the sector. So what happened? Citron hit Electrameccanica Corp. The first tweet called Solo a complete joke and gives the company a $2 price target. Now this is extremely bearish on the company because we know the stock price sits over $10 right now, and they're saying that the price should be $2. So we definitely may see some sell-off this week, but I am holding strong on this company. And you can see here where other EV might be overvalued, this is laughable, the tweet said. It goes on to say, Citron noted Electrameccanica has spent under $6 million on research and development over the last 12 months and has delivered a total of 6 cars in 2 years. The second tweet goes into the $2 price target and notes there is nothing here. So here's the main tweet here. Solo is an EV trade for a real sucker, not one real institutional investor here. They had a going concern just a few weeks ago. OMG, over $1 billion market cap. Now the tweet said there is not one real institutional investor. I'm going to show you guys there is some institutional investor buying going on, and I also think this is probably why we saw a little bit of that stock soar as well. So let's check this out. So we are on CNN Business, and as of November 20th, you can see the stock price $10.87, and year to date 405.58%, which is massive. And you can definitely see there's some institutional ownership and some buying that is going on. I want to show you guys two big institutional players that have bought a few shares in Solo. You can see September 30th right here. Investo Capital Management LLC, they bought 1.4 million shares in Electrameccanica vehicles. And then we have good old Morgan Stanley here. They bought 637,000 shares in Electrameccanica. So you can definitely see there's some institutional buyers buying into Solo. So that tweet is not 100% accurate. So I definitely, want you guys to keep that in mind. This is one of the top short sellers in the game, so they definitely want to see the Solo stock price go down to zero if they can. And also, this is the same research firm who gave the $25 price target to NIO as well. So definitely keep that in mind. Don't panic. If you want to hold this company long term, they want you to panic so they can make more money. And last but not least, let's take a look at my juicy Solo stock position. Now, I wanted to buy more shares, but the stock price soared faster than I could actually buy the shares. And I also only started with this portfolio with about $1,100 to be completely transparent. And I wanted to kind of spread out my money, and Solo stock price just completely took off. So I know you guys are probably going to say, Mike, why don't you own more shares? There is your reason. So let's dive into it. So now we are on the Webull app, and this is my personal Solo Electrameccanica stock position. And you can see here I am up 188.92%, and that is $272.80. That is a massive gain. And if you can see here to the far right is my total cost, which is what I paid, into the position. $144.40. My average price, $3.61, and my market value, $417.20. And you can see I just have 40 shares in Solo Electrameccanica, and the last price of the company, $10.43. And you can see here at the very bottom on the field records, I bought this company on the 6th of November, so I haven't had this company long, but only 2 weeks. And you can see how much I am already up on this position. So timing is everything sometimes in the market, and researching and buying and holding sometimes. So that is my personal position in Solo Electrameccanica. If we happen to see a huge sell-off this week in the market and it falls close enough to my average cost, I would definitely buy more into this position because I do want to own more in this company. I would like to own at least 100 shares, but at these prices right now, and as much as I am up, I'm just going to kind of ride this wave and see what happens. So definitely consider subscribing to the channel if you haven't yet. If you enjoyed this video, smash that like button. And if you want to ask me some questions or get to know me a little bit better, be sure to go over and follow me on Twitter and Instagram at Mike the Investor. Remember to stay inspired, stay motivated, always invest in yourself, and I'm out.